So what is the difference between the term depreciation and the term amortization in accounting? Well, these two terms are often used interchangeably, but there is a little bit of a difference, and I'm going to explain that in this video. So for starters, the term depreciate means to diminish the value of something over time, whereas the term amortize means to write off the cost of something over time. So they are quite similar, but I'm going to get into a little bit more detail to show the difference here. So for depreciation, it's typically used with a tangible asset, like a physical asset. Think of vehicles or equipment like cameras or different electronics or things like that. So something that's more physical, tangible, an actual asset that your business is going to be using. Whereas with amortization, it's more of an intangible asset, something that isn't physical, probably that can't be sold. So that's one of the main differences. Depreciation is more for a physical, tangible asset. Amortization is more for an intangible asset. One other difference is that with depreciation for those tangible assets, typically those tangible assets can have some value once you're done depreciating them. So think of like a vehicle, for example. It might have a useful life of 10 years in terms of accounting and depreciation. And at the end of 10 years, it might have no value in terms of accounting and tax purposes, but you might still be able to sell it for something. Whereas with amortization, there's generally not going to be any resale value at the end of the life of the amortization schedule. So think more some type of software that you bought for your company. You can't really resell it, but it's going to be used for the course of 10 years rather than incurring that cost and expensing it just for the first year. When you're actually going to be using it for 10 years, you can amortize it over the course of 10 years and have equal expenses being charged to your business each year rather than all in one. One other difference is that depreciation is usually a contra account. So meaning if you purchased a truck for like a construction business, you're going to add an asset on your books in one account. And then as you depreciate it over time, every year that you charge depreciation, you're going to increase your depreciation, your accumulated depreciation, whereas the asset account is going to lose value. Whereas amortization doesn't always have that contra account. It might just be a way to incur the cost of something over the time that it's being used, rather than allocating it all to the year in which you made the purchase. One other difference is that with depreciation, there are many different types of ways to do it, and that can depend on your jurisdiction and depend on the asset. Maybe it's straight line where it's 10% of the initial purchase every year for 10 years, or maybe that's 30% of the initial purchase, and then the next year it's 30% of the value of the asset after the second year. So there's different ways to depreciate assets. And here in Canada, like a vehicle would be depreciated differently than maybe computer equipment or things like that. So depreciation, there's more ways to actually depreciate the tangible assets. Whereas with amortization, it's most commonly amortized at a flat rate, like a straight line, the same amount each year. And so when it comes to determining whether you should amortize something or depreciate, obviously this is a conversation to have with a qualified accountant in your region, because there is a lot of nuance to it. It depends on your region, it depends on the asset, it depends on the nature of your business. So definitely a conversation to have with a qualified accountant. And one thing to add is that not every asset is depreciated and not every intangible asset is amortized. It depends on a number of factors. I've covered that in a different video. But for example, if you're buying some notebooks and some pens that are $20, you're not going to bother to depreciate those. Or if you have a subscription to, let's say, just YouTube Premium for your business, and that's $10 a month or $12 a month, that's not enough to create like a capitalized asset or something that you want to expense over time or amortize or depreciate over time. So again, there is a lot of nuance to it. I just wanted to kind of give you a basic explanation of what those two different terms mean. And I hope that that was helpful. If you liked the video, please click like. If you want to check out my channel, I have over 100 videos on business startup and business management topics. And if you have any questions on those topics, feel free to just leave a question in the comment section below and I will address it.